Okay, dear students, good day and assalamu alaikum. Hope you all are fine. This is Mustafa Mirchawala, your SBR trainer. Okay, and today we are here for the first revision day of December 2022 attempt. Okay, I always say in my revision days that the objective of revision day is not to solve a past paper. Although we'll solve a past paper, but this is not the objective. Because I've already solved almost all past papers. Even I would say till now, in all the latest past papers, only two questions are left. Only two questions are left, which are latest March-June 2022 attempt, question number 2 and question number 3. These are left, all others are solved, and it's included in my LMS, and many of them are on my YouTube channel as well. Okay, so we have a lot of resources, but the thing is that we need to give, the objective of this class is to give you guys confidence. Okay, because normally students think that this is a very difficult paper, although it has a very good pass rate. It has a better pass rate than many applied skills paper. Like if you compare F5 and F8, like PM and AA pass rate, SBR has a very good, very good pass rate. It's around 50%. So 50% pass rate in a professional qualification, it's excellent. It's excellent, and it's an opportunity. That's why many students clear in first attempt. Many students, right? First of all, I would like to say that we have made a WhatsApp. We are going to send you a WhatsApp group link in the chat box. Please join that WhatsApp group so that in future, I can remind you for the next class. I can send you the slides. I can send you the relevant articles or whatever I would like to send. Okay, right? So there will be a communication between us. Now, the next thing is, as I told you, that it has a very good pass rate and students can easily clear. So I always insist my students to score 50. That's my target. 50 is everything. But yes, you can see I have shared the very latest September 2022 attempt results, September 2022 attempts result, and there is a possibility that in this list, there are some students, maybe your friends, right? Because this is a very short world. So you can see these students have even scored 80. There are many students, see, they have scored in 70s, in 60s. And you know, we as a teacher just post few marks. These are almost 30-35 students. That means there are many students. There are many students, those who passed in 50s. And I love them. I love 50 marks. I literally love 50 marks. But yes, I post the highest marks just to motivate my students. So when these students can score 70s or 60s, why can't you score 50? They also study the same way as you are doing. The same lectures, the same revision days, the same articles. Yes, you have to read the articles and make a proper study plan. Give 3 to 4 days to consolidation, 5 to 6 days to standards, then give proper time for past papers. Even as you all know, we are providing you the marking facility. You can send your scripts and you can get the feedback. But do follow one thing, that don't send for 4 or 5 questions together. That's not the right approach. You can send 4 questions, but you should send in pieces. Like what you should do, first you send the first question, we'll give you the feedback, then you can see that feedback and then solve the next question for us. Send us with some improvement, with the incorporation of that feedback which we have written in the last sheet. And then second, then third, gradually you will improve, right? This is the way you should follow. And one mistake what students do, they solve single question, and they don't solve the complete mock. I always say in exam, you have to fight with 4 people in one go. And what you do in your studies, at your home, you start preparation for only fighting with one guy. In exam, you have to fight with 4 guys together. And now, since last 2 or 3 years, this is a routine feedback that student can't complete the paper. Students, I would say the position holders, they say that we know complete paper, but we just opted like 90 marks, 85 marks, 80 marks. So that means there is a time management issue. So I would say that don't write irrelevant, be exam focused, write relevant. Even if you see in today's class, I'm going to solve the question number 2 of March June 2022 latest past paper. I will write very specific points. This time I've made a solution just to pass the exam, just the relevant thing, no more extra thing, because obviously you are running short of time, and this is the routine thing that students can't complete paper on time. Okay, so for this time management, do as much mock as you can. Like you can solve 3 to 4 mock, and now the next question is, sir, from where can we get the mock? 1 or 2 mocks we send you the mock which officially we conduct. That mock you can solve, and after that you can solve complete past papers. Like you pick up one past paper, March June 2022 attempt, although we have done in class, still you can do March June 2022, solve it on the computer, right? Obviously proper. Then of September December 2021 past paper, complete and solve it in the required time. So in this way you will be able to solve complete past paper. Okay, so follow these steps, make a study plan, read articles, read examination report. For sure you will clear, for sure. And one last message: stay away from negative people. Stay away from negative people, because they have already destroyed themselves, but now they want to destroy you. They want to transfer their guilt in you, right? So better talk with positive people, and better don't take help from the person who doesn't know himself. So obviously that guy will confuse. And this is what happens in the WhatsApp groups. This is exactly what happens in the WhatsApp group. People confuse each other and they give you tension, and then they destroy your mindset. They destroy your successful mindset. I'm telling you. See, these are the marks. These are the latest marks. I'm not showing you the marks 10 years back. This is the result of last 20 days, before last 20 days, these results came. So that's it. That's the story. Okay, moving on. So this is question number 2. This is, students, question number 2 of March June 2022 attempt. March June 2022 attempt. I have told many things, but I will with time I'll share more things. Okay, so now relax. You will clear, for sure. You will clear. Majority of you will clear, I'm telling you. Renshu company develops gaming apps for which customers are encouraged to buy enhancements and add-ons to play more effectively, right? This is simple. We are a gaming company. We make games, we make game apps, we make gaming softwares. And now how we earn? First of all, let us say we give the free game, and then we say that if you want if you have played 2 rounds, now the 3rd round you have to pay this. Now for the enhancement you have to pay this. For the add-on, for more power, if you want a more powerful punch, you want this. If you want a more powerful car in the game, you want this. Okay, right? In this is how we earn. Very simple, the normal business. Now the company's current financial year end is 31st December exit. Yes, you must know 31st December exit. This is your accounting period. Now there are 3 paragraphs and then 3 requirements. 3 paragraphs, 3 requirements. But to save our time, what I'll do, I'll read the first para, and then the first requirement is connected to the first paragraph. First requirement is connected to the first paragraph. I'll solve that first. Then second para, second requirement. Third para, third requirement. That's it. Now, the first requirement is about ethics. And I must say that, like, 8 to 10 marks of your examination is about ethics, and that's very easy marks. That's easy marks, easy marks. If you solve the kit once, if you solve the kit section of ethics, you will say that it's majority overlapping. It's majority overlapping. For ethical issues, when you write the safeguards are 4 or 5 safeguards which are routine copy paste in each and every question. Even in this question, we'll also write some safeguards. The financial accountant of reissue company, an ACCA member. Yes, as right now I'm teaching ACCA class, so ACCA member. When I teach ICW, they write ICW member. So whenever you are a member of a professional body, you have to follow some ethical guidelines. So all ethical guidelines apply on this. Okay, on this guy, Renshu is responsible for overseeing the authorization of small loans up to $500 to customers for use on their gaming app. Right now, the name of the gaming app is Jammy Play. What is the responsibility of this guy? That he authorizes loans to customers, like $500 loan to any customer he can authorize, right? So just make up your mind. He will be involved with, he may be diverted towards some customers, those who are not eligible for loan, but still he'll give the loan. This will be the scenario. He is paid a commission based upon the number of loans granted in a period. See this. So now this is a very high, there is a high possibility that the more loans he'll provide, he get the more commission. So when you hire such staff, or when you give such bonus, or when you give such performance related incentives, then the objective of the accountant or the objective of the manager is to just do sale, right? Now this guy won't care about the company's future. This guy even won't think about the credit risk related to such loans, because as we are providing loans, so there will be a receivable in our books. As we are providing loans, so there will be a receivable in our books, okay? Now the effective interest rate on the loan is approximately 1076% per annum. See, such a high interest. That means this loan will generate a very high interest income. That's why he's going to be paid a good commission. Okay. Now, however, if the loan is paid back within 1 month, there is no interest charge. Now you think about the business model. Let us say I have given loan to the customer, and customer paid in 25 days, so no interest. 26 days, no interest. 27 days, no interest. But yes, if customer won't pay in 1 month, then customer has to bear interest. So now this guy will automatically be inclined. Towards giving loan to such customers who will delay. This guy will automatically incline towards giving loan to such customers, those who will delay. But you know, those who will delay, that means they are weak people. And when they are weak people, there is a risk of bad debt. So it's not in the favor of organization. There is a clash. See, there is a clash. Means just to increase his bonus, his commission, he can give loan to a very impaired party. Let's see what happens. Customers apply for short-term loans via an online AI system, artificial intelligence. See, this is very common nowadays. Artificial intelligence in all over in the articles, even the ethical issues related to artificial AI system, which have been subject to frequent cyber attacks, are used in the process. Now hold. In the question discussion, we can write here that we should make a proper system, because the customer's data is involved. And you know, there are issues related to Data Protection Act. And see, this AI system has been subject to frequent cyber attacks. So we need to make, the organization need to make sure that they have made their artificial intelligence system with proper company, with proper software house, with proper security checks, because in their industry cyber attacks are very common. So this is the risk which we need to discuss. Are used in currently the laws on consumer credit in the jurisdiction only allow such loans where the credit worthiness of the applicants has been checked. Okay, so now you have to make sure that the law says, the law of that country or the law of that community says you can only give loan to the people whose credit worthiness is proper, and who will check this credit worthiness? AI system. So once again, AI system must be properly trained or properly maintained by a software house, by a software company, so that it makes sure that it comply with the law, it comply with these law guidelines. Okay, otherwise we will not go towards the unethical transaction, we'll go towards illegal transaction. We may enter in the illegal transaction. Okay, so this is the risk. So these 2 points you have to address. The first point, what I said, cyber attacks. So AI system should be properly maintained. The second thing, you have to follow the law as well. Right? Because if you are giving loan to wrong people, it's against the law. Then there are two groups of customers, group A and group B, who have different social demographics. You can say that the one party is white and the other party is blacks. The first party is like belong to blank, they speak language X, the other party speaks language Y. So any demographics you can think, like in US there are some different demographic people live, like Asians, whites, blacks, different, right? Okay, so you can think of it. The financial accountant has full knowledge of the AI system and knows that the credit approval system is positively biased in the favor of group A. See, he knows that the AI system is trained in such a way, has made in such a way that group A people will get loan easily. So that means what the law says, it's against the law. The law says that you have to give loan to the people who have good credit worthiness, but AI system is inclined towards the group A. So see, this is against the law, and this financial accountant knows this reality. So now, knowing this, there is a question mark on his integrity. And professional behavior, which we need to discuss, right? And then we'll be discussing the safeguards as well. He defends this practice by saying that it gives group A a chance to improve their financial position. See, they are just giving loans so that their financial position will be improved. That means this clearly shows that group A has not good financial position, and not good financial position means not good financial credit worthiness. So in reality, group A people are mostly not eligible for the loan, but still they are getting. So this is against the law. This is against the ethics as well. And this is dangerous for the company as well. Okay. Now, group A is known to have less wealth and that group B and is less likely to be afford to pay back the loan within a month. Wait, there is a little disconnection issue. Wait. Okay, students, sorry for the disruption. Now, see, read the last line. Group A is known to have less wealth. Group A is known to have less wealth than group B and is less likely to be able to afford to pay back loan within a month. See, this is all pre-planned. That means financial accountant knows that the AI system is inclined towards group A. AI system is inclined towards group A. So that means more loans will be given to group A. And he is defending group A as well. He is defending group A as well. And you know why he's defending group A? Because when they give loan to group A, the group A are less wealthy people, so they will pay late. And when they will pay late, they will pay a very high interest. Then they will pay a very high interest to the company. And when the company will earn a very high interest income, so obviously a very good commission he will earn. So see, there is a self-interest as well. There is a self-interest transaction as well. There is a self-interest transaction as well. Okay, so few points we have just picked, like about, as he's the ACCA member, first line, ACCA member, so definitely he has to follow the ethical guidelines, obviously. Then the AI system is subject to cyber attacks, so your company should need to make such a system that is proper with proper security, and the professional people have made it. The third thing is, there is a law that you can only give loan to such people, those who have good creditworthiness. So again, this thing is checked by AI system. So AI system should be proper again. The fourth thing, the integrity of financial accountant. Financial accountant is inclined towards group A. He knows that AI is inclined towards group A, and still he is defending group A. That is against the integrity. Okay. And what the argument he is giving that this may improve, if we give loan to them, this may improve their financial position. But on the other hand, there is one more dialogue. If they won't pay, then this is a loss to the company's shareholders. If they won't pay, then this is a loss to the company's shareholders. Very simple, right? So all these points. Then finally, we can see in the last line that there is a less likelihood. There is a high likelihood that they will pay after 1 month. That these guys, group A guys, will pay after 1 month. And when they will pay after 1 month, so obviously this accountant will earn more interest income. So these were the ethical dilemmas, ethical issues we have just identified. And now the safeguards, that he should report to the seniors. He should discuss this issue with the professional body like ACCA, right? And if there is no other thing is left, he should not involve in any unethical thing, and he should resign. So this is how we write. Very simple. But if you take tension, you will go to some other end. And with tension, you can't even write. A good answer, right? So now don't read the complete question first. Don't waste the time. Our time is very important. Your time is very important, especially. So let's move on to the requirement 1. Let's see what the examiner is saying. See, discuss the ethical. The first is ethical, and the second is professional dilemmas. See, ethical and professional. See the requirement, all of you. Now the screen is there. Ethical and professional. So there were some professional issues as well for the financial accounting in overseeing the loans made to customers, and appropriate actions to be taken. See, in the end, appropriate actions to be taken. That means the safeguards. Right? Okay. So it's 8 mark thing. Let's see. In my classes, I have discussed this thing in other past paper as well. It's better you follow the approach heading, sentence, heading, sentence, heading, sentence, heading, sentence. In this way, marker will give you marks easily. It's easy for marker to mark your things. Okay, right? Let's move on to the solution. I've already told you in this question, there is nothing practical. So it's useless to type in front of you. At least now I'm teaching to strategic level students. Strategic level means director level. One is operational level, and this level is director level. So the objective is not to teach you how to type. It's only typing. So let me show you the discussion. See, this is requirement number A. Requirement number A. Okay. Loan to customers. First of all, see, I have written, let me enlarge the screen. Let me enlarge the screen. The first heading is context. First heading is context. The financial accountant must ensure that artificial intelligence system complies with applicable laws. Yes, I have already told you that obviously we have to comply with local law as well. The local law of the country, local law of the city. Of the AI system complies with applicable laws and regulation, which means Renshu company that the system must take into account laws of consumer credit. Laws of consumer credit. AI system must follow all law related thing, must comply with the law. And one more thing, in the lecture I told you that there are cyber attacks issue, right? And through cyber attack, the data of the customers may leak, and this is again ethical issue as well, that you should not leak the data. See, now AI ethics, that this needs to be robust and be secure against cyber attack and data leakage. That the artificial intelligence system must be made in such a way that it should be properly secured. The AI system should adhere with the ethical principles such as fairness and explicability, right? So just we have written few lines, and obviously we don't need to write too much. We have to write relevant. Now, the next thing is, now come to the heart of the question. Credit group. You know, there were two credit groups, group A and group B. Group A and group B. Now what this accountant was saying, that by giving loan to group A, we are helping them to grow. We are helping them to stabilize. We are helping them to make financially strong, right? That's the argument he gave in the question. Now let's see. Providing credit to the group can improve the stabilization and also improve the individual financial position. See, I have written with my pen, giving favor to one party. By giving loan, by giving credit to one party, that is group A, the accountant said in the question that we are stabilizing them, we are helping them to grow, we are helping them to improve their financial position. But there are other consequences as well. Further, there could also be a case where individual defaults on the loan by spending too much on the gaming. See, that's even negative for that party as well. That this is even negative for that customer as well. If you give a free credit to the people who can't afford, if you give free credit to the people who can't afford, so a game is like a drug. To be very honest, although I don't play games, I'm not into games. Thank God, I'm not into games. Yes, I am in sports, but not in these type of video games. But I have seen people, those who play at the age of 50, 55, I have seen that those who play video games, they spend 6 hours, 5 hours, they don't care about anything. It's like a drug. Okay. And when drug is available on loan, so you will take more. Just think. So that's not even good. That's not even good for that customer as well, that he doesn't deserve and he's enjoying. So one day he will default. And when he will default, obviously it's a loss for your company as well. It's a bad debt for your company as well. So these sides you need to discuss, right? See, I have written which will affect shareholders of company. Loss for our company as well. Loss for our company as well. Okay. So this is how you discuss. Heading, sentence. Very simple. Now, what is the responsibility of financial accountant in all this? In this question, he had some responsibility. He has a responsibility to oversee loans and should ensure the system process is fair, such as gaming threshold equally for the group and individual. This was his responsibility. Now, one question you may ask, and I have said this many times, I have said this many times in the class. I say this to my ICW students as well, because these two qualifications are very superior qualification, ACCA and ICW. Listen, in ACCA, you write solution from your question. You have to copy things. You have to copy things from your question paper. And you know, in ICW, you take an exam folder with you. You have to copy things from your exam folder. This is the difference. So yes, there are many things which you have to copy paste from the question. This financial accountant line is we have just copied from the question, the responsibility. Now, there was an integrity issue we have identified. We have identified that if he is biased towards one party, that means his integrity at compromise, right? The accountant should adhere with integrity and be straightforward and honest in all professional and business relationships. He should not allow any biased decision making and should not compromise professional judgment, right? So this is what he should do. This is what he should do. Now, there was one self-interest issue as well. There was some self-interest issue as well. Obviously, why this accountant was inclined towards group A? Because of the commission. Because of the commission. Yes, I will share the answer. Somebody is asking. After the class on the WhatsApp group, I'll share these slides. You just see the video. Now, this is the commission thing. The accountant received commission based on the number of loans approved. What is difficult in this? You have just copied from the question. Yes, he will get from more and more loans. This could influence his decision making. Also, by defending the AI system indicates he holds his self-interest, which may compromise his integrity. And see, I have written here some extra lines. You can also, he is biased towards group A because group A is less wealthy and high chance of 1 month delay. High chance of 1 month delay. And we can also further write in this way, you can get a very high interest income. The interest rate of 1076% per annum. The interest rate was 1076% per annum, right? So now what actions he should take? The final thing is safeguards. I told you, he should apply professional judgment. He should talk to the seniors. He should talk to the professional body. And if nothing happens, if nothing happens, then finally he should resign. That's it. See this. We strongly suggest that accountant revisits the code of ethics because he is ACCA member. And on ACCA member, code of ethics is ACCA code of ethics applies. An analysis of professional judgment and conduct. This can be discussed with his senior management. Number one, since in many circumstances he has faced several ethical dilemmas, he can also contact ACCA for advice. The old thing, the not new thing. If you have taken that class, ethics is not a detailed topic. If you have taken that class, you know this thing. And take decision to leave the company as last resort. This is the last thing. Okay. One question somebody asked me right now. Let me give the answer. Sir, how we'll decide the headings? That's your choice. Although you can change the name, of headings, but the objective of heading is to clarify things. It's to give easiness for the marker to mark, to work neatly, to work properly, to work in such a way that it is understandable for the marker. This is the objective. Because not to mix 2-3 points in one sentence, because if you mix 2-3 marks in one, so it will be difficult for examiner to give you the same marks, because we don't have that much skill to differentiate between white and black. We sometimes leave gray areas. So that's why if you write in pointers with headings and sentence, there is a high likelihood to score. This is the thing. Now, don't expect that you will get 8 out of 8. We don't want this. We don't want 8 out of 8. We want 5 out of 8. 5 out of 8 is very good. We want 5.5 out of 8. This is very good. Again, very good. Because you just have to clear. Even you can't clear. Many students, they try just to clear the boundary, the 50 marks. That's it. So yes, you can. And I again repeat that if you want to clear the paper, try to complete course on time. One thing. And how to complete course on time? By starting the course on time. And by making a plan, you have studied variances topic. Try to calculate variances. Now, if you make your study plan from now, let us say you haven't studied any and made any plan. Still you have 1 month. I can give you hundreds of examples that there are students who start studying now before 1 month and they clear from zero, they clear it. Right? So make a study plan and start calculating the variance. Variance is very important. And then punish yourself. Now, the next requirement is totally related to IS 38. Now, second, in this question, the first requirement was easy and the second requirement was super easy. Now I'm going to discuss super easy requirement. Super easy. I'm telling you the word super easy. Very easy. Even I would say F7 level guy can do it. F7 level guy can do it. It's related to consolidation, basic consolidation. Acquisition of assets sets out the accounting of acquisition of intangible assets that do not constitute a business. Right? Renshu company has purchased a company. Means it's like a takeover, which comprised a customer database and a number of domain names which do not constitute a business. So that means they are not itself a business. If they are business, then they will be treated as a separate companies. If these databases and domain names are businesses, then they will be treated as a takeover of complete business. So now they are not business. That means they are separate intangible assets. Now wait, with the database, this is the time of data. This is the age of data. Even yesterday I was reading one article that UAE, in UAE there is a minister they have since 2017 or 2016, they have a minister for artificial intelligence. They have made a ministry for artificial intelligence. They are doing a lot for this. They are doing a lot for this Meta and all these stuff data. And now recently they have made a data framework. They have made a data guidelines so that this will help many more companies to come and invest in UAE, and they can work with ease. More laws they have improved regarding data. So be ready, get ready. The data is the hottest topic. Even just think, even the education institutes also need the data. I give you one example. Sometimes there are now the world is a global village. Sometimes what happens that one student search SBR past papers on YouTube, and coincidentally he got my one class. When he saw my one class, he comes to me, he says, sir, I didn't know this type of teaching style before. Now I want to join you. It happens very routine. I've seen even in this class there are students who joined in this way. Now listen. So sometime I say this to my admin team that I want to show my demo class to the whole chartered accountancy community one time. This is my wish, to show my free demo class to the whole chartered accountancy community. And how can I do this? By getting the data. If I have the data of all accountancy students, so that I can reach them. So there is a very high value of data. So yes, data is intangible asset, no doubt. Data gives you future economic benefit. My dear students, right? So from this first paragraph, this is perfect, that They are not businesses. They are simply intangible assets. This will give you future economic benefit. And yes, they are separable. They are two separable assets. In the IS 38, if you remember IS 38 basic rules, if you remember IS 38 basic conditions, so there was one condition of separable or identifiable, separable or identifiable. So yes, these two meets. Therefore, rent issue company has to allocate the purchase price to the individual identifiable assets in accordance with IFRS 3 business combinations. Yes, this till here it's perfect. Now, the customer data base relates to contractual arrangements whereby rent issue company receives a commission C benefit. Yes, economic benefit is there. Eco benefit is there. So yes, there is a probable, remember the old conditions, there is a probable chances that we'll earn, probable chances that we'll get economic benefits. So yes, it's a criteria. We have met the criteria. By referring customers to online gaming websites, rent issue company either receives an upfront payment from every customer referred to the gaming websites, or it receives a share of revenue streams based on referred customers' further usage. Now, this thing is just to make sure you that yes, we have economic benefits. So yes, database is proper intangible asset, and it meets the condition of asset as well. The acquired assets also included a number of domain names, yes, from website which have gaming content. Rent issue company had arbitrarily allocated the purchase price for the company to the two intangible assets domain names. The first was domain names, the other was customer data on a 50-50 basis. Very wrong. This is very wrong. This is very wrong. This is very wrong. We have never ever stated that do half 50-50. What is the basis? What is the basis? The bases are fair values. The bases are fair values. Let me give you example. You might have, listen to me. You might have listened the word purchase price allocation in my lectures. I use this word. I sometimes use the word purchase price allocation. Go very slow. For example, today I have bought a running business. So if I have bought the running business, that means I have bought all the assets of that business. I have bought the vans, I have bought the buildings, I have bought the inventory, right? I have bought the goodwill. That's what we say. So we must know, listen to me. We must know how much we have paid for which asset. So for that, we always calculate fair values. And remember, if there are some assets, listen to me, if there are some assets which are not already at fair value, so we bring those assets to fair value, and this is what we call fair value adjustment. I hope you remember fair value adjustment. You have done in F7 level, SBR level, all levels. Remember? So the criteria is fair value. If you want to differentiate assets like building and van, so you allocate, you record assets to fair value, no other value than fair value. And for fair value, yes, there is only one standard, IFRS 13. So there is only one standard, which is IFRS 13. You better know. So everything is perfect. Everything is perfect in this paragraph. It's totally ready paragraph. Just one thing is wrong, and that is the allocation. That is the purchase price allocation, which they have said 50-50. It must not be 50-50. It should be according to the fair values. That's it. You earned 4 marks. You earned like 4 marks. You earned 4 marks. Now wait, let me show you the requirement and then we'll move on. Okay, be confident. Discuss whether the customer databases, see the screen, discuss whether the customer databases and domain names should be recognized under IS 38 intangible assets, and how the purchase price should have been allocated in accordance with IFRS 3 business combination. Yes, as these customer databases and domain names, listen very carefully, are separately identifiable, and we are going to get the economic benefit from them. There is a high probability we are going to take the economic benefit from them. So yes, they are intangible assets, and this is perfect that the company is recognizing as intangible asset. But no for the second point. No for the second point. There is no instruction in IFRS that do it 50-50. No, you have to allocate according to fair values. You have to allocate according to fair value IFRS 13. And if you want to write something about IFRS 13, so yes, IFRS 13 has given more details about how to calculate the fair values. There is a level 1, level 2, level 3, level 1, level 2, level 3 valuation models. You can do it, and that's how you calculate the fair value. That's it. Nothing else. Nothing else. Let me show you. Now, as per, see, so first of all, the heading is IS 38. We are writing the criteria of IS 38. As per IAS 38, intangible assets should be recognized for the customer database as it is probable that the expected future economic benefit will flow to Renshu, right? Application. Now we are doing application. Renshu company also acquired domain names for websites which have gaming content. This will satisfy the separability criteria for recognition in IS 38. Yes, these intangible assets are separable and should therefore be recognized as intangible asset. Intangible asset. So first of all, you just discuss the criteria. And yes, you set the green signal to what is written in the question. You just affirm that what is written in the question, what the treatment they have followed is perfect. The treatment which accountant has followed is perfect. Now, what thing you will disagree? The thing with which you disagree is the allocation of purchase price is based on a 50-50 basis on the domain names and customer, and it is not accordance openly with IFRS 3 business combination. What IFRS 3 says, new purchase price allocation for the separately intangible should be carried out in accordance with IFRS 3, whereby purchase price should be allocated to the individual identifiable assets and liabilities on the basis of their relative fair values. That's why we used to do fair value adjustment. That's why we used to do fair value adjustment. And one thing just for your reminders, let me tell you, there is only one time in the whole IFRS when it is mandatory to bring complete company to fair value. There is only one event in which IFRS says to bring the complete company to fair value, and that event is takeover. At the time of takeover, you need to bring complete subsidiary to fair value. There is a question for this. There is a theoretical question in your SBR exam kit, and I have also discussed that question. I remember in last 3-4 years I have solved that past papers. So this is the one event when you need to bring the complete company to fair value, and that is the takeover. That is the takeover date. Okay. So now IFRS 13, the fair values of separate intangible assets should be identified using appropriate valuation techniques in accordance with IFRS 13 fair value measurement. Okay, there are different valuation techniques. You can apply any according to this intangible asset. According to this intangible asset, you don't need to go in details. You don't need to go in details as the question is not demanding. It's just 4 marks requirement. It's just 4 marks requirement, right? Okay, like if there is an active market of this intangible asset, then you can go to the market and calculate. But yes, if active market is not available, then you may go for the future cash flows present value. You may go for the future cash flows present value, and so on. So this is the discussion for requirement B. This is the discussion for requirement B. Now let's move to requirement C. Do you remember IS 8, changes in accounting policies, changes in accounting estimates, and prior period errors? Changes in accounting as policies, changes in accounting estimates, and prior period errors. Listen to me. Changes in accounting policies are applied retrospectively. We all know this. This is basics. Changes in accounting policies are applied retrospectively, right? That means you need to adjust opening retained earning. Changes in accounting estimates are applied prospectively. And prior period errors are also adjusted retrospectively. You know this. Now, let me teach you some basics. As a student, you may ask, sir, changes in, you just said that changes in accounting estimates are adjusted prospectively. Changes in accounting estimates are adjusted prospectively, but prior period errors are adjusted retrospectively. Why? So there is a very basic answer. Because accounting estimation depends on availability of information. Accounting estimation depends on availability of information, and that information was not available in the past. That information just arises. So in estimation, you know, there is a change of information. There is a birth of new information, evolvement of new information. That's why that information is available just now. That's why we apply it prospectively. But in prior period errors, that information was available in the past. That fraud was going on in the past. That information was available, but we couldn't see. The information was there in the past. So you need to go in the past and adjust. Okay, that's what we do. I hope you remember. I just gave you a quick recap so that you can smoothly solve the last requirement. Okay, last requirement is about this. Okay, this is the last paragraph. Let's read it. Point number 3, payments for the app describes the accounting for and de-recognition of intangible assets. Renshu company develops, you remember, internally generated intangible assets. I hope you remember research and development cost topic. Your favorite topic. Since F3, you are doing this. New gaming apps in conjunction with other companies. When acquiring a stake in these projects, Renshu company makes an upfront payment and agree a series of further payments based upon the fulfillment of certain defined objectives in the process, both before and after the app is given final government approval. Now, prior to the current year, that means we are paying for the making of the intangible asset. Okay. However, in the current year, see, we have paid in the last year. Just make your mind. These are 2 years. And we have paid in the last year. And we recorded whatever amount we paid, we recorded it as an intangible asset. Whatever amount we paid, we recorded it as intangible assets. Okay. Now, prior to the current year, the payments made have been accounted for as an acquisition of separate intangible assets as the price paid reflected its belief that the expected future economic benefit would flow to Renshu. Means, what does it mean? Means at the time, that means on the last year, when we were there on the last year, we were expecting that there will be a proper future economic benefit. We were expecting that there will be a proper future economic benefit. Okay, that's what our expectation was. So that's why we booked the intangible asset, because of the expectation. Now, the probability of recognition criteria on IS 38 was considered to be met. See the green signal. Everything was at that time, what we were seeing, it was perfect. It was perfect. Now, however, in the year, this is our year, current year, 31st December X8, this year. However, in the year to 31st December X8, Renshu company revised its strategic plan and decided that all previously capitalized payments to date were to be derecognized and expensed as a research and development cost. See, now in the current year, this year, students, please look at here. Now this year we have just revisited our plan. We have said that this asset won't give us any benefit, and let's book expense. Let's derecognize the asset. Let's make the entry asset credit and expense debit. Asset credit and P&L debit means expense debit. Okay. This reversal of the current accounting treatment has arisen due to concerns. See why we are doing this. Due to concerns that the payments did not means past tense. Did not means past tense. Did not meet the criteria for recognition as an intangible assets. That means we did mistake in the last year. You are not getting my point. See the language. You know, you are giving a strategic paper, you must understand the language. Why we are going to book the expense? Why are we going to book the expense now? See the reason. This reversal, I'm reading it again for you guys. This reversal of the current accounting treatment has arisen due to concerns, important line, that the payment did not past meet the criteria for recognition as an intangible asset, and that also that the cost will not be recovered in full. Now hold. That means, look at here. That means we did mistake in past. According to them, we did, if I just accept his words, if I just take his words as granted that he's correct, so that means in past we did mistake. In past, the criteria was not met, but still we booked the asset. So this was the mistake of IFRS in past, and which is discovered now. This is a mistake or misinterpretation of IFRS, or the application of IFRS in past, which happened in past and discovered now. So my dear students, my beautiful students, this is a prior period error. This is going to be a prior period error. Then you know this. If you have studied IS 8, if you applied any international accounting standard wrong in the past, if you applied any IAS wrong in the past and you discovered now, so this is going to be a prior period error. This is going to be the prior period error. Very simple, very simple. And you know, prior period errors are always adjusted retrospectively. Prior period errors are always adjusted retrospectively. Okay, this is what the interpretation says. Now let's see what he is doing. Renshu, and one more doubt. They say that the cost will not be recovered in full. See the word. It in full means, that means still there are some recoveries left. In full means still there are some recovery left. It doesn't mean that we'll get zero. See the English, see the words. will not be recovered in full. In full means we'll recover something. At least we'll get something. At least we'll get something. Let me take you to the point, some point. I have to show you something. Now, Renshu company considered this action. Renshu company considered this action to be changed in an accounting estimate. See, they are saying that this is change in accounting estimate. No, this is prior period error. This is prior period error, because according to the words used in the question, they have used the word did not meet the criteria. That means in the past it was a mistake. And you know, I just recap you the accounting estimate. Accounting estimate, what is accounting estimate? Their accounting estimate means some new information is evolved now. Some new information is evolved now. There is no new information. They are saying the information was there in the past. They are saying that the information was there in the past, but we didn't see that information. We did not see that information. So this is prior period error. This is not change in accounting estimate. So we need to correct them. Recognize the amounts prospectively by recharging them payments to. So see, they have transferred complete asset in P&L. They have made the entry P&L debit and asset credit. They have made the entry P&L debit and asset credit. Giving you 1 minute to read. Take your time. Take your time. Be relaxed. Read it. Requirement is not difficult, I'm telling you. Now listen, let's read. It's a 6 mark requirement, means 3 marks each. There are 2 requirements. Somebody is asking which attempt. This is the last latest attempt, March, June, the last latest past paper available on the internet. It's this past paper. Question number 2. See, advise Renshu company on the accounting treatment of the payments of the for the app in the year ended 31st December X8. First of all, be very careful that right now we are in 31st December X8. We are in 31st December X8. We have to advise now. We have to advise for this year. And the asset is recorded last year. On the assumption that the amounts, the first assumption, please don't sleep now, did meet the criteria, recognition criteria for intangible asset. Now don't see the second requirement. Don't please see the second requirement. The first thing is, let's assume that whatever accountant did last year, accountant recorded asset last year. Accountant recorded asset last year, so it's perfect. See, did meet, that means the whatever he did last year was perfect. So that means we will book the asset last year because the criteria of asset had met. And it's better you write the criteria in 1 or 2 lines. It's better you write the criteria in 1 or 2 lines. Okay, right? Now listen. So you have booked the asset, and if that asset has a, whenever this asset will be completed, just extra things will be completed, we can amortize it. Whenever this asset will be completed and available for use, then we are going to amortize it if it has a finite life. If it has a finite life. Okay. Now, next thing. In this year, there is a problem arises. There is a problem arises of recovery. There is a problem arises of recovery. I repeat. In this requirement, we are assuming that whatever we did in the past was perfect. So we booked the asset, and still we are on this belief that our decision was correct. So no need to do anything in the past. No need to do anything in the past. In the current year, we just came to know, it was written in the question, if you just read that there is some recovery issues, we won't get full recovery. So whenever somebody tells you that your asset won't give you full recovery, so this is the hint of impairment. This is the hint of impairment. And whenever you get the impairment hint, you calculate the recoverable amount, you do the impairment testing, and look at me. And if the recoverable amount is lower than the carrying value, then you must book impairment. Very simple. This is what you have to write. This is what you have to write in the first point. This is what you have to write in the first point. Make your mind. Don't read the second one. Don't read the second requirement now. Now listen. Let me show you the first point. Just first. See this. IS 38 requires an entity to recognize an intangible asset. See, this is just the routine discussion. No need to waste time. It's the criteria thing. If the payment met the recognition criteria for recognition, the intangible asset should have been recognized prior to the current period. Yes, they have recorded the asset in the past and the criteria is met. Now, once you have recorded the asset, now there is a possibility of derecognition. There is a possibility of derecognition. You can derecognize it, but you know, when you derecognize your asset, when you sell it, or when it is confirmed that you will get zero economic benefit, you will get no economic benefit. You derecognize your asset. When you dispose it off, or when you are sure that you will get no economic benefit. But in this question, it was written that we haven't sold it. There is no line for selling. And number two, we will still get some recovery. See, some, not full recovery, but some recovery. So this is not at all the case of derecognition. This is not at all the case of derecognition in requirement number A, because derecognition only happens when either you dispose of or you are sure that you won't get any economic benefit. See, the intangible asset should be derecognized only on disposal or when no future economic benefit are expected from its use or disposal. It seems that neither of these tests for derecognition have been met by Renshaw. Therefore, it is not appropriate to derecognize the intangible asset. Still, I'm saying we are on requirement number first. We are on assumption number first. That in past we did correct. Now, what's the conclusion you will write? If there are doubts over the impairment thing, this is the impairment thing. If there are doubts over the recoverable amount of the intangible asset, the Renshaw company should assess whether the intangible assets are impaired and therefore should be expensed if the carrying amount is more than the recoverable amount. I already told you. This is the 3-mark discussion you just did. 3-mark discussion. First assumption. Now, second assumption I have already explained you. During the lecture. Let's move on. Wait, let's read it 1 minute. Okay. So, second requirement. Accounting treatment for the payments for the app in the year ended 31st December exit on the assumption that the amount, now I'm doing this requirement. Look at here, this on the assumption that the amounts did not meet the did not meet the recognition criteria for intangible asset. So even in the requirement itself says did not means we did mistake in past. Did not means we did mistake in past. So we did mistake in past and it is discovered now. We did mistake in past and it is discovered now. So if this is simply a prior period error, this is not change in accounting estimate. This is simply prior period error. Be confident, please be confident. Look at here. Look at the screen now. Renshaw company should have considered whether the recognition criteria in IS 38 for internally generated were fulfilled at the time of capitalization prior to the current period. Now you have to check in the past whether you did right or wrong. Now, if let's answer according to the question. What was the requirement? This requirement. In this second requirement, we are assuming that we did mistake in past. Now we are assuming that the recognition criteria had not met. If the criteria were not met and the payment should have been expense, Renshaw company will have retrospective adjust the balance. See, let me write prior period error. Okay. Retrospective means opening retained earning to be adjusted. This would mean adjusting the opening balance of C of each affected components of equity for the earliest prior period presented and the other comparative amount disclosed. That is very simple. That is simple standard language. Okay. You need to change the opening balances. The reclassification of intangible asset to be expense as research and development cost does not constitute a change in accounting estimate. See, this is not change in accounting estimate. Why? Because accounting estimation depends on availability of information. If you can only say it accounting estimate when there is a new information arises, there is no new information, but we just came to know one old information. Which was presented in the past, but we neglected it. Okay. Estimates must be revised when new information becomes available, which indicates a change in circumstances upon which the estimates were formed. Now, thus, if the payments were intangible assets, then they should be recognized and tested for impairment. If they did not, see final words, if they did not qualify as intangible asset, then the amount should be treated as prior period error and adjusted retrospectively. That's the end of this question. That's the end of this question. One student is saying that this is too much. Let me tell you, you can skip something related to this first paragraph. If you want to skip, if you want to make it short, you can do. The other paragraphs are important. The other application paragraphs are important. Okay. So always keep it in mind that, for example, 3 students are writing as the same question. There is a judgmental issue. Everybody has its own vocabulary, has its own style. So yes, there may be a difference. Don't worry about it and don't take it on heart. Now, dear student, that's the end of this question. Now, I came across a very good article because of ACCAglobal.com, and I have already said this many times to read the articles, but unfortunately, some students, not all, some students, they don't invest in articles. So what we do in my revision days, I sometimes open up articles and I explain some points so that you get some motivation, so that you get some points. Like in the last attempt, In the last attempt, I discussed in detail the climate change thing, and yes, the climate change thing came. Exact climate change article came in exam. So before that class, I recommended students to read it, but I know many students, they don't give time to reading. Okay. Yes, I'll send the articles. I'll send you the articles. Don't worry. Don't worry. I'll send you the articles. Even I have sent on my broadcast list to many students before. I'll send it again on the WhatsApp group. Don't worry. So there is one article. There is one article regarding onerous lease contracts, impairments, and investor issue. Okay. Onerous lease contract. This is just the introduction of the article. Just quickly read it. Nothing in this first paragraph. Somebody is asking that book reading is important for the no study text is. It's okay if you there. Listen to me. There are some students, they have been reading study text since the first paper, like from the basic F3 F1 paper. They have the proper mindset of reading whole book. Yes, they should read. Such students should read the book. It's okay. But those students, those who are professionals and they don't have time, and they are going to work smartly, so they are not recommended to read the study text in this SBR level, because the already course is big. So it's better you read the articles, you solve the exam kit, you solve the latest past papers. That's more than enough. Okay, now let me discuss this thing with you. You know, there are 2-3 issues which we have to discuss. You know, in new IFRS 16, all of you, please look at me. In new IFRS 16, majority leases are now finance lease. Majority in lessee books, majority leases are finance lease, right? Like in 1 or 2 areas, you are allowed to use operating lease exemption. Like if the lease is less than 1 year or it's a low value asset, otherwise the lease is finance lease. So you make the entry ROU debit and lease obligation credit. ROU debit and lease obligation credit. Okay, students. Now, my dear student, please concentrate here. Don't write too much in the chat box. It will waste your time. Please concentrate here. So according to IFRS 16, my dear students, we make this entry ROU debit and lease obligation credit. Now, on this debit side, ROU, you can apply IS 16. Yes, and you can sometime you apply IS 40, investment property. On this debit side, you can apply IS 16 and sometime you apply IS 40. Let me explain you how. For example, you have taken a machine on lease. And you are going to use that machine. Use USE. You are going to use that machine. So whatever asset you use, you apply IS 16. Whatever asset you use in your non-current asset, you apply IS 16. Okay. So if you are using it, you apply IS 16. Look at here, smart students. But now, today, you bought a property on lease. You bought a property on lease. And you started giving them on rent. Now you are earning rental income from that property. So when you are earning rental income from that property, so now you have to apply IS 40 on it. You know that whenever you earn rental income from any property, you apply IS 40. So both of these things are possible. And in IS 40, there are 2 models. One is cost model. Strictly, we are discussing the asset side. Here, right? Cost model, and the second is fair value model. Okay. One is cost model and the other is fair value model. Okay. And same is the case with IS 16. IS 16, again, we have cost model and the other one is revaluation model. Okay. Cost model and revaluation model. I haven't discussed anything difficult. Don't think like that. Go simple, go relax. This is what, and I've given you the logic as well. Okay. Now let me read the article. Let me read the second paragraph of the article, or let's read from the first paragraph. IFRS 16 leases has brought significant change to the accounting treatment of leases. The most important of these changes being that the leases now have recognition, lessees now have to recognize operating lease as a right of use asset. Yes, in past there were many leases were operating lease, but now majority leases are finance lease. As with other asset, this ROU asset may have to be tested for impairment. Yes, since the ROU asset is a non-financial asset, we all know ROU is not a financial asset. Yes, on financial asset, there is a separate world of impairment. On financial asset, there is a separate world of impairment. On financial asset, there is a separate world of impairment. You know, stage 1, stage 2, ECL, expected credit loss model. That is where there we don't apply IAS 36. On financial asset, we don't apply IAS 36, but ROU is a non-financial asset, please. The requirement of IAS 36 apply. However, there are 2 exemptions to the IAS 36 impairment model. See, now we are discussing these two exemptions. And you already know these exemptions. You already know these exemptions in the lecture. If you have taken the lecture of IAS 36, look at here. Firstly, don't sleep now. Look at the screen very carefully. Firstly, when a lessee applies the fair value model in accordance with IAS 40 for its investment properties. Now hold. See, let us say you bought a property. See the case. You bought a property on lease and you made the entry ROU debit and lease obligation credit. Now you have started giving that property on rent. You have started giving that property on rent. So now you are earning rental income from that property. Now you are earning rental income from that property. And when you are earning rental income from that property, so IAS 40 is justifiable. IAS 40 is justifiable on that ROU. And now in IAS 40, you have 2 models. One is cost model and the other one is fair value model. One is cost model and the other one is fair value model. So if you are applying fair value model of IAS 40, so recall it, please recall it. In IAS 40 fair value model, all changes in fair value to be taken to P&L. All changes in fair value to be taken to P&L. So there will be an automatic impairment. There will be an automatic impairment. So no need to book impairment IAS 36 now. This is what this guy is saying. Now, second point. Secondly, if ROU asset relates to a class of PPE, relates to a class, you know the class of asset, you know the class of asset, you remember the class of asset, like all furniture is one class of asset, all buildings are one class of asset. I'm talking about IAS 16 now. If ROU asset relates to a class of PP to which the lease, for which the lessee applies the revaluation model, then the lessee can elect to apply revaluation model to all of the ROU assets that relate to that class of PPE. Now wait. Listen to me very carefully. Hope you remember this dialogue in your basic studies F3 and F7, especially in F3 and F7 of IAS 16, basic dialogue. If you apply one model to an asset, you apply the same model to complete class of asset. What does it mean? If you apply revaluation model to building X, then you have to apply the same revaluation model to all buildings. Otherwise, people will start cherry picking. Remember in the basic studies you did. Otherwise, what people will do, what accountants will do, they will pick good properties and they apply revaluation model on good properties. and they will apply cost model on bad properties. So what IS 16 says, if you apply revaluation model on one property, you have to apply revaluation model on all properties. And let me repeat it again. If you apply, my dear students, if you apply revaluation model on one asset, you have to apply that revaluation model to whole complete class of asset. Okay. So now just think, today you have taken an asset on lease. You have taken an asset on lease, and that asset belongs to IS 16 because you have taken it for usage. You have taken it for usage, and that asset falls in the class of asset on which revaluation model has already been applied. Revaluation model has already been applied. So obviously now you have to apply revaluation model on this as well. So now if you are applying revaluation model, now again you can skip impairment accounting, because they say in revaluation you have to bring it to fair value. In revaluation you have to bring it to fair value, and when you bring it to fair value, automatic impairment will be done. Automatic impairment will be done. That's their science here. That's their argument here. So there are two exemptions. See, there are two exemptions to ROU from IS 36. There are two exemptions to ROU from IS 36. Now I'm not saying anything. I'm giving you time to read this paragraph. Read it again. This paragraph. See this paragraph. Just think you are doing your studies. Just think you are preparing for your exams. Read this paragraph. And look at here. I said this to many students. There are students, they message me, they say, we read article and it's very difficult. So obviously, this is a strategic paper and articles have a different advanced language. So what's the solution? You read it 2-3 times. Even I read. There are articles I've read 10 times. Yes, this is very normal. So read it more times. Number one. Number two, don't expect that you will understand 100% thing. Otherwise you will become the super teacher. Otherwise you will become teacher. So don't expect you will understand 100%. Just if you are getting 60%, 70%, still this is good. Still this is good because you are a student. You are a student. This is how give message to your mind that you are better than others. Okay, read this paragraph now. Read this paragraph, please. And see the sketch which I have made. Now the next paragraph, which is very general, and I assume everybody or all of you must know. Let me enlarge. I taught you this. Normally in this world, IS 36 says it is very, very difficult. It is very, very difficult to calculate recoverable amount of a single asset. In this world, it is very difficult to calculate recoverable amount of a single asset, because normally a single asset does not generate independent cash flows. A single asset does not generate independent cash flows. So what we do, we make a smallest group of assets. Make a smallest group of assets and we calculate recoverable amount for that smallest group of assets that generates independent cash flows. And we call it cash generating unit. I'm sure you know this. Right? So this is what IS 36 is saying. One more thing. Now, normally a little technical line I'm saying, but now as you are on the last month of your exams, as you are just 1 month before your exams, so you have some knowledge. When you do impairment testing, you calculate value in use. You not only you calculate value in use, but you also calculate fair value. When you do impairment testing, not only you calculate, my dear student, respected student, value in use, but you also calculate fair value. So fair value means you will search for a buyer, that how much amount the buyer is going to pay you, how much amount the buyer is going to pay you for the running business. Okay, look at here. So you IS 36 says that is the buyer going to buy your business with liabilities? Is the buyer going to buy your business with liabilities as well? If yes, if the fair value includes a liability impact as well, if the fair value includes the liability impact as well, so yes, in the carrying value you also have to include the lease liability. In the carrying value, my beautiful students, you also have to include the lease liability, so that the comparison would also be like with like. It's not difficult. Read it. Okay, now one very interesting issue which I have to discuss. Interesting point. This was just a discussion to come to that point. I hope you have all remember the onerous contract. I hope you all remember the onerous contract. I have taught this onerous contract in the class. Even we teach in F7 and FR level. We teach in SBR level. We teach in ICWO level. All levels we teach onerous contract. Look at here. What is onerous contract? Onerous contract is a contract that is signed, and now you came to know that the future economic benefit from this contract is less, but the unavoidable cost is higher. Future economic benefit is less, but the unavoidable cost is higher. Okay, look at here. So now whenever you find such onerous contracts, so IS 37 says you have to book the provision for that onerous contract. You have to book the provision for that onerous contract. Okay, and you have to make the entry P&L debit and provision credit. Now how to book the provision? You remember I taught you in the class lower off. You remember you used to pick two things. Number one, the future rentals, the future committed rentals which you have to pay, to take the present value of future committed rentals, and on the other side you write the penalty. And whatever the amount which is lower, you going to book the provision for onerous contract. Do you guys remember onerous contract? Please write on the chat box. You remember this or not? You remember this or not? You are chartered accountants now. You are chartered accountants now. Okay. Thank you. Look at here. Now just think. In onerous contract, we are going to book the future cash flows, all the future rentals present value. Now this is what the science is. Because we have signed the agreement. Okay, but this onerous, and you remember when I was teaching this you in class, when I was teaching onerous contract to you guys in the class, I gave the example of a machine 2 years lease. That means we have taken a machine on 2 years lease, and suddenly after a month or so, government has passed the law that now this machine is useless. You can't make any product from this machine. Whatever product you are making from this machine is banned. So now that machine is useless. So remember, I told you at that time, now calculate the future rentals present value at one side, and on the other side keep the penalty amount and take the lower off. Okay, so this, please listen. So this treatment was perfect. This treatment was perfect for the lease agreement when there was no IFRS 16. This treatment was perfect for the lease agreement when there was no IFRS 16, when there was no IFRS 16. But now, what the latest IFRS 16 says, even it's a 2-year or 3-year lease. If a lease is 2-year or 3-year lease, still you book ROU debit. Still you book ROU debit and lease obligation credit. If it is just a 2 years or 3-year lease, and means more than 1 year lease, still you make this entry, ROU debit and lease obligation credit. ROU debit and lease obligation credit. So now when you make this entry, what is ROU? How you calculate this entry? All future cash flows, present value. When you make the entry ROU debit and lease obligation credit, that means you have calculated all future cash flows. So use your brain. You have already booked all future cash flows, present value in the form of ROU and lease obligation. So now in this case, now you don't need to book any onerous contract provision. Technically now you don't need to book any onerous contract provision. Use your brain. So this is what is written here. So technically now you don't need onerous contract accounting. Okay, but yes, as just think about the story, as a new law has been passed about that machine, about the product, that now you can't sell that product. So when the government has banned the product, so obviously this machine is useless. And when the machine is useless, then this is the hint of impairment. This is the hint of impairment. So now you have to book impairment testing for this ROU. Now you have to book impairment testing for this ROU. Impairment testing for this ROU. Read it, please. Read it. Let's read it together. Let's read it together. It's very interesting topic. Interesting topic. Don't sleep. When considering onerous contract, these are governed by IS 37 provisions, contingent liabilities and contingent assets. And this IFRS standard is applied to any contract for which unavoidable cost of meeting the contract obligation exceed the economic benefit expected to be recovered under the contract. However, please, the students, whatever I just told you, read it. However, it is interesting to consider whether IS 37 or IFRS 16 can coexist. See, how is it possible? How is it possible? We have already booked all future cash flows in the form of ROU and lease obligation. We have already booked all future cash flows, present value in the form of ROU and lease obligation. So if you apply IS 37 now, you are going to do it again. You are going to book the same thing again. So it will be doubling. It will be double counting. The International Accounting Standard Board decided not to specify any particular requirement in IFRS 16 for onerous contract. The board made this decision because, listen now, this is the solution now. For leases that have already commenced, that means for leases on which you have made the entry ROU debit and lease obligation credit. For leases for which you have already made the entry ROU debit and lease obligation credit. ROU debit and lease obligation credit. After an entity can appropriately reflect an onerous lease contract by applying the requirement of IFRS 16. Just go with IFRS 16 because you have already booked all future cash flows. You have already booked present value of all future cash flows. A lessee will determine and recognize any impairment of right of use applying IS 36. Yes, but as we just received the bad news, the bad news itself is an impairment hint. The bad news itself is an impairment hint. So now we need to book impairment. Now we need to book impairment for this ROU. Okay. This is point number A. What is point number A? If the lease has been commenced, lease has been started, you have already made the entry ROU debit and lease obligation credit, ROU debit and lease obligation credit, then you have to do this. Then you just have to book impairment. You just have to book impairment accounting. You just have to do impairment accounting. For leases, for be confident, you will understand. For leases that have not already commenced, means for leases for which you haven't booked the entry ROU debit and lease obligation credit. So now you have the room to apply IAS 37 for leases which are not already commenced, think over it, means you have not made any entry ROU debit and lease obligation credit. So yes, now apply simple IAS 37, old IAS 37, the way you used to book. The requirement for onerous contract in IAS 37 are sufficient. The requirement in IAS 37 apply to any contract that meets the definition of onerous contract in that standard. Now you can apply IAS. So now what is the summary? Let me give you the summary. Oh, please don't sleep. The topic has already ended, almost ended. Only one paragraph is left. Just one paragraph is left, please. If the lease has already commenced, that means we have made the entry ROU debit and lease obligation credit. That means we have already booked all future cash flows present value. So now you cannot apply IAS 37 you cannot apply onerous contract accounting. You can only book impairment on ROU because yes, the bad news has just arrived. Okay. Now B part. If the lease has not been commenced, that means you have not booked the entry ROU debit and lease obligation credit. So now you are free. You are free to use IAS 37 onerous contract accounting. Okay. Now, little energy is needed. Some energy is needed. What is written? The question also arises as to how to deal with onerous contract when initially applying IFRS 16. Now I am discussing this part A. In part A again you have two options. See, let us say the lease has already been commenced. And you have made the entry ROU debit and lease obligation credit. Okay. So now you have, standard has given you two options. The company can either first, apply IAS 36 to right of use asset. This I just told you. When, please look at here, when the lease has already been commenced, that means you have already booked ROU debit and lease obligation credit. So technically you have accounted for all future cash flows. So now no need to do any IAS 37 thing. Just do IAS 36 and tell me students, how we book IAS 36 impairment. Let me tell you the impairment entry. This is the impairment entry. See, impairment entry will be, let me change the color. Impairment entry will be P&L debit and that asset credit. This is for requirement number 1. P&L debit and ROU credit. This will be the impairment entry, and we all know how to calculate impairment. I am not going to that detail. How to calculate impairment, this is a separate issue. But this is how you will make the entry for impairment. For this case, there is one more option. For this case, there is one more option, which is option number 2. Not apply IS 36. Look at here. Not apply IS 36 on the date of initial application, but instead rely on its assessment of whether any of its leases are onerous under IS 37. Any onerous lease provision is derecognized and an equal amount is deducted from the carrying amount of relevant right of use asset. This line looks difficult for a student. This is a second option. Listen. Although, please look at me. Although you have made this entry, I agree. Although you have made this entry, the lease has been commenced. Still, you have one more option. What option? You ignore everything and you start accounting. You start accounting for onerous contract. And you know, in onerous contract is part of IS 37. Onerous contract is part of IS 37. And yes, an onerous contract is a provision, So you calculate the onerous contract provision and make this entry. See, P&L debit, make this entry, P&L debit and provision credit. First make this entry. P&L debit and provision credit. First make this entry, P&L debit and provision credit. And as a second step, see this, read this. And any lease provision, any is deducted from the carrying amount of the relevant right of use asset, and then make a second entry. Then make a second entry, provision debit and ROU credit. Cancel it with ROU. Cancel it with ROU. So what technically you are doing in point number 2? What technically you are doing in point number 2? See this. Let me do. You are ultimately canceling this provision. Just think. In the first entry, you credit the provision, and the second entry, you debit the provision. In the first entry, you credit the provision. In the second entry, you debit the provision. So automatically P&L debit and ROU credit, the same thing you will find. See, ultimately P&L debit and ROU credit will be left. You are not getting. See, this in the second treatment, you are doing 2 entries. You are making 2 entries. In the second treatment, you are making 2 entries. First, P&L debit provision credit, and then whatever provision you have created, you are going to cancel it in front of ROU. So technically, provision credit and provision debit will set off. Provision credit and provision debit will set off, and the remaining entry, P&L debit and ROU, will be left. This is a choice. This is a choice given by IA standard, and see, it is written. The choice can also be applied on lease by lease basis. The choice can also be applied on lease by lease basis. The choice can also be applied on lease by lease basis. This is a choice. I know it is little bit difficult, but again, you guys are big guys. You are big boys. So big boys should lift heavy weights. Big boys should lift heavy weights. Okay. And you know, I recommend a student to do these articles. Do these articles yourself. It is your duty. You have taken all the classes, revision days. Now at least you can read the articles. And if you know, if you read, you will get some material in your mind to write. If you read, you will get some material in your mind to write. Just think, you know, I also make vlogs. Nowadays I sometimes make one vlog per day. But how can I make the vlog? I have to read 3 to 4 hours daily. 3 to 4 hours I have to sit in a separate room. In that room, my kids are not allowed. No family members are allowed. So when you read, you speak. You read, you write. Obviously, so the solution is reading. Okay. Even I have taught you this article. This is not enough for you. Even I have taught you this article. You need to, some student need to see the recording again. Some student need to read this article again. This is how we do. This is how we do. This is how repetition is done. This is how the repetition, even you have seen In my teaching style, I repeat. In my revision days, I repeat. Although I repeat in normal class, I also repeat in revision days. See, repetition is important. Read this line as well. Read this line. See, exam tip. There is an exam tip. See that there is an exam tip by the examiner. Yes, I'll give you the recording. I'll give you the recording. Don't worry. I'll send you. Don't worry. It will be available on YouTube as well. Did you read it? Did you read these points, my dear respected students? Now, students, almost to, as per my knowledge, I have sent some questions to almost all my list. At least save my number. Those who are my registered students, save my numbers. Save my number. Otherwise, you won't get my messages. Okay, because I send messages through a broadcast list. First thing. Number two, I have sent some questions for practice, for which the question which you will send me for marking, and this is the season of marking. This last month is the season of marking. Get your things checked by your teacher. Okay, right? So please avail that facility. Don't miss it. Still you have time. Otherwise you will regret. Still you all can clear by working hard and staying with positive people. The second point is very important. I think much more important than first point. If you stay with negative people, those who spread negativity that you can't do it, it's a very difficult paper, people fail, you are wasting your time. Then it's better you don't work even hard. Okay, so both things are equally important, right? So it's time to say goodbye. We'll keep one more revision day, inshallah, soon. And I'll give you the most probably next Sunday. We'll meet again. Okay. And I have recorded almost all latest past papers. Only one question is left. That is question number 3. That is question number 3 of March, June 2022 attempt. All the other past papers have already been recorded. Thank you. Take your time. Thank you.